in an effort to figure out what gold is doing, I'm going to give you my gold price prediction based on where we are in the market. To do that, I'm going to study the past to try to predict the future, and we're going to look at some data. And, Scott Bessent came out and he said, he was asked, why is gold going higher? And I saw some tweets about that he said, well, there are more buyers than sellers, and that's simple enough. So there's been so much geopolitical turmoil, there's been so much uncertainty in the market that people are rushing to gold. In fact, it's one of the best performing assets of the year, and that should terrify you. It should terrify you if you're a gold investor, because then after the rise, sometimes comes the fall. It should terrify you if you're not invested in gold, because gold could be signaling that something incredibly dangerous is going to happen. And above all, you don't want to miss out on the run if it could give you life-changing gains. So I want to look at the market and really determine, should I be buying here, should I be selling here, or holding, because it's really hard to know. And to do that, I just want to look at the data and look at the anatomy of a bubble. So year to date here, Bitcoin is only up 15.4%, and gold is up 63%. I'm just rounding up here. I'm using the SPDR Gold Trust, that's the GLD, just to measure this for an approximation. And this is completely, absolutely wild. When gold is, this is like 4x year to date what Bitcoin is, just using round numbers. And this should terrify anyone who's invested in gold. It should terrify anyone who's not invested in gold, because something big is happening. I don't know what it is, but I really want to dig into the facts, look at the different things, and just see if we can come up for a prediction of where gold could go. So I've seen a lot of articles like this, like Jamie Dimon. He has come out and he has said gold can easily go to $5,000 or $10,000. Now, Jamie Dimon is a banker. Bankers usually hate gold. They don't like gold. It's very confusing when they start talking about gold. It probably means we're closer to a mania phase, and a lot of the data that we're going to look at is really just me trying to determine, here, let's got to figure it out as I stuttered through this. I got to figure out, is this a mania, or is this early in the mania? Is it late in the mania, or is something else afoot? Now, the way I'm going to look to do that is I'm going to follow the wisdom of Ray Dalio and study the past to predict the future. And we want to predict the future for gold. So to do that, we're going to look at this historical chart. And now one of these things about this historical chart is it's very concerning. So this is the historical chart just of the gold price going back 20 years. If you look at it, it looks strikingly familiar to a chart that I want to bring up here. And this is the price of gold here in Germany during the Weimar hyperinflation. So this really begs the question, are we about to go into a hyperinflation? Is it starting right now? What is gold telling us? Now, if you look at the chart here that I pulled off of Wikipedia, you can see that gold went up, it went sideways, it went up again, it went sideways, and then it started this crazy parabolic run. And if I look at the gold chart here, you can see that it's strikingly similar. If I was baiting for clicks on Twitter or something, I would have overlaid these graphs to show you how they're almost identical, because I could have shrunk them a little. So here you can see on the left side, gold goes up, it goes down and sideways, then it goes up a little bit. This is when it went up during the plague, and then it trended sideways, and now it's broken into this parabolic run. It looks strikingly familiar. Another chart that I want to point out here is this same chart, slightly different. Let me pull it back so I'm in the right line here. This is the gold charted in the Japanese yen, and everyone knows that the Japanese yen is not as strong as the US dollar. Maybe you don't know that, but maybe now you do. So, you know, they've been printing and printing currency and buying their bond market forever, wanting inflation and never getting it, or whatever the people say. The point is is that they have a massive amount of debt relative to their GDP. Some hedge fund owners would say if you want to see the future, just look at where Japan is going. And now here is the gold price in yen. You can see that it follows this exact pattern very similarly. It went up at a slow incline till 2012, and then it went sideways, and then it went up a little, and then it went sideways, and then it did this parabolic hyperinflationary move. And just in the last 3 or so years, it went up from 200,000 yen per ounce to 644,000 yen per ounce. That's like 3x move in 3 years. This is a massive, massive move. And you know what? The gold is making a massive, massive move in dollar terms right now. Now, this chart also looks very similar to the hyperinflation chart. Let me bring that back up again. You can see it goes up slowly, consolidates sideways, goes up again, consolidates sideways much for a shorter amount of time, and then it goes on the most crazy parabolic run. So this is just looking at the past to potentially predict what could possibly happen in the future. I don't know, but these charts look very, very scary. So my point in all of this is, here's back to the gold chart again in the US dollar. That looks the same. It looks the same in the Japanese yen. Are we about to go on a parabolic rise that ends with gold up to 4,000? It's up to 4,000. I meant 4,000 leaping to 8,000, leaping to 10, 12, 16,000. Who knows? If it follows what it did in the Japanese yen in the last few years, well, gold could be at 12,000 before you can blink your eyes. So that's very concerning, because gold at a very high price is not a world that you probably want to live in, because that means more conflict, more inflation, more people turning away from traditional financial systems like bonds and whatnot. So my point in all of this is this rise has me very concerned, and it should have you very concerned, whether you're on the gold train, off the gold train, or thinking about getting on the gold train. That's what I'm trying to answer. Should I get on the gold train even more? Now, another thing that I want to do is I like to look at the past. So in the past, we're just going to use ratios because, well, no one really knows what the price of gold should be, because it's all determined on buyers and sellers. If there are more buyers, then the price is going to go up relative to the amount of people selling. If there are more people selling relative to buyers, well, the price is going to go down. So let's look at the price historically towards stocks, because, you got to put your money somewhere. Cash, gold, real estate, somewhere. You have to choose something. And in the past, we've had these periods where gold relative to other assets was a price. So let's look at this to try to determine if gold is significantly overvalued, undervalued, or if it could potentially go a lot higher from here, or are we in the mania right now? So here we go looking at this chart. This is a chart that I've got from Macro Trends that is just comparing the S&P 500 to gold. And you can see back here in the 60s into the 70s, gold bounced around from, let's call it, at the lowest, a 2 to as high as like a 2, just over 2.5. This was when gold was cheap relative to stocks. And then history told us that it went on an epic run all the way up, peaking in 1980s when I think gold was at like 800 something. So you can see at that time it peaked at 0.19. So basically 0.2 relative to where the S&P 500 was. Then again, in 2000, everyone knows in retrospect, looking back, gold was very, very cheap at a few $100s an ounce. And that was the time to buy. And relative to stocks, it was a 5 on this scale. So definitely when this graph is higher, it's historically been a good time to buy. And when it's lower, it's historically been a good time to sell. Now, we're only using 1, 2, 3, 4, 5, 6 periods in history. And the 6th one doesn't even count because that's today, so I don't really know. Now, if we look at 2011, when it last peaked, got all the way down to 0.8. And now that just tells us that it was really expensive relative to stocks. Here we go. We are in this period where gold has been trading in the last 5 years, 6 years. Again, bouncing around from 2 to almost 2.5 in a very similar range to the 60s relative to stocks. And right now it looks like it is really accelerating down on this graph and up on the other graph. And right now we're currently at 1.78 as of September. And now gold has moved even dramatically higher just in the last month. So it's going to be a bit higher than this. We can do an exact calculation later if we need to. But my point is just to get broad view of, is it cheap? Is it medium cheap or in the middle? Or is it incredibly expensive? Because this can help me determine if now's a good time or not a good time. So it's probably a little bit lower than that on this graph now. So you can see it is not blisteringly expensive relative to stocks, but it is also not incredibly cheap. So if I had to guess, let's use analogy of innings in a baseball game. We're definitely not the first inning, but we're definitely not the last inning. We're somewhere in the middle. And if I had to break it into thirds, we're definitely past the first third. I don't know if we're past the second third. And it looks like we're not in the last third, at least relative to historical trends here when we're talking about stocks. So now the last thing I want to talk about here before I get into some more interesting data is just to think about the psychology of it all. So this is the psychology chart of a bubble. It starts with the stealth phase when it takes off. Then it gets into the awareness phase, and then there's a sell-off, and this is a bear trap. And this is very reminiscent of the whole plague. No one cared about gold. People, the smart money, the gold bugs, they were accumulating gold. And if I go back here to the historic gold chart, I would say the stealth phase is here. Back, no one cared about it. Then it started to go up, and we had the plague, and it sold back off. And, everything that had happened, they printed all this money, all of the gold bugs, who had said, all right, everything has happened that would send gold to the moon. It didn't go to the moon. Well, I must be wrong. And that was this first sell-off bear trap, and it went completely sideways. Now, this kind of tracks exactly with it. Now we are clearly in the media attention phase because everyone hated gold. Jamie Dimon was not telling you to go buy gold. Now all of a sudden, all of the big banks, they're coming out with gold price targets over the last year. It's all over Bloomberg. It's in Barron's. It is everywhere. You know what? I was at the gym. I was doing my workout, lifting the weights, and I'm looking up at the TV. The TV's always running in the gym, and there is literally the 1-800 we buy gold, or we sell you gold. How we buy gold. We sell you gold coins going on an ad campaign at the gym there. Now, this is something you would have never seen 5 years ago. It's probably not even something that I've ever seen in my life. I wasn't paying attention to any of this back in 2011. Now, this definitely was not happening 2 years ago or 3 years ago. So now clearly the media is paying attention. Jim Cramer's talking about it. We are in the media attention phase. We're well into that. So are we in the phase where everyone gets euphoric and then they get greedy and they get delusional? I'm not sure, but we have entered or passed the beginning, middle of the media attention phase. We are up here in the public participation phase. So this is the most dangerous phase of any bull market because I don't know if it's going to go on for one more day, 2 more months, or 3 more years. It's really hard to tell. But we have, if I had to guess, we've just entered the public phase. Now you got to remember with the internet, everyone talks about the stuff. It goes really fast. So this could be the end. Or it could be the beginning of the end, and it could go on for a very long time. I'm not smart enough to know if this is just an average bubble or if there's some war coming or currency reset happening or any of that sort of stuff. Because this is definitely, we're in the euphoria, greed. I don't think we're in the delusion phase yet, but maybe we are in the delusion phase. We wouldn't even know if we are in the delusion phase. So I want to come up with some more data. So what I've done here is, let me go over to my chat GPT. Or no, I don't think I used chat GPT. I used Grok to figure this out. All right, so I'm over here and I've had Grok analyze a bunch of data for me. And what I did was I got the price of the S&P 500, I got the gold price, and I got the average home value going back to 1973 when gold became free floating and you were allowed to trade it. And the reason I did this was I just want to compare it to other investments. So I can say, is it cheap? Is it expensive? We did this with S&P, but now I also want to do it with home prices because that's just a great way to look at it. So now we're just going to compare relatives, relative one thing to another thing, because this is going to just help me guesstimate, and I'll use air quotes around this, is this thing expensive or is it not? So here I'm using the average home price for the year, the average gold price for the year, and the S&P 500 average price. And then we're going to look at the ounces of gold it took to buy a house and the ounces it took to buy the S&P 500, just to give us a wild average so that I can say, are we cheap, expensive, or medium? And this is just to help gauge. So we know that back in 1981, the gold market peaked. So back in 1981, the average home price cost $83,000. The average gold price here in 81 was $458. Maybe it peaked somewhere between 80 and 81, back here at 600. So let's look at this average here in the peak here. We'll use the 1980 number. Remember, I'm just going for wild estimates here because nothing is going to be exact. It's just trying to paint a picture. Now, the gold price, when it was in the 600s, I know it got up to 800 briefly, but we're just using broad swaths here. So in the 80s, when gold clearly was high relative to history, just because we know it peaked, the average home price cost $76,000 to $83,000. So, around $80,000. And the gold was somewhere between $450 and $800. And just using the average in the 1980s, we'll just do that one line. Okay, so it's averaging 600. The house is averaging 76. And what does that mean? The S&P 500 was averaging 110. And that meant that the price of ounces to buy a house was 124 ounces. If you had 124 ounces of gold in your safety deposit box, you could buy a house. And it took 0.18 ounces to buy the S&P. So that was when gold was clearly super expensive. It took 124 ounces to buy a house. Let's go all the way to 2000. Now 2000, gold was clearly super cheap. That was the epic bottom after a 20-year bear market. At that time, the average house was $205,000. It took 734 ounces to buy that house. So, what I say, 128. So 734 divided by 128 is 5.7. So almost 6 times as much gold to buy a house at the absolute bottom. Now, let's compare that to 2011 peak. The 2011 peak, I think it peaked in 2011, 2012, around there, just going off memory. I don't have the chart in front of me. I could pull it up, but it will distract me from what I'm doing. So here, the house price was $264, $288, and at this time it cost around 170 ounces. This is during the peak. So way back in the 80s peak, it was 124 ounces, give or take. And then in the peak in 2011, 2012, it was 168, 170 ounces. Much, much lower than 700 ounces, way at the bottom. So then gold bottomed again. When did it bottom? I think in 2015. So in 2015 it bottomed. It took around 300 ounces to buy that average house in America. And we don't know what's going to happen now. So let's talk about that. We know that historical floors were somewhere near 128 ounces for a house. Well, guess what? Right now, this year, gold has averaged it's averaging 3,300, and that's 154 ounces. You know, gold right now today, as recording it, I think it's at 4,300. And the price of the average house today, according to the Fred, is $513. So $513,000 divided by 4, let's just call it 4,200 because the gold is moving so quickly. So that's 122 ounces to buy the house. So if we're measuring gold in terms of housing, we are at the absolute peak right now. Absolute historic peak. So the question becomes, do you want to buy gold here, or should you be selling gold here? People think that the gold bull market's going to go on and on and on. Now, maybe it could. Maybe we could have a currency reset, and maybe it could. Now, as far as the price of stocks, well, here, I know the S&P is a little higher. The average for the year is 6,100, and it takes 1.8 ounces to buy that. The S&P 500 right now, today, is a little higher. So we'll look at today, it's at 6,600. So 6,600 divided by 4,200. Oh, I'm doing it the wrong way. 4,200 divided by 6,600 is 0.63. So today we are at 0.63. Now, historically, gold topped relative to stocks in 2011. It was at 0.82. It's at 0.63, so even lower right now. I'm reading that wrong. 0.82, 0.7. Okay, and it's 0.62 right now. And let's look at the 1980s. 1980s, it got all the way down to 0.2. So it could have a lot further to run relative to stocks. But home prices, relative to home prices, it is right up there with the last few. So after looking at all of this data and looking at the historic bottoms and the historic peaks in gold, well, relative to history, if I follow Ray Dalio's rule of studying the past to predict the future, I'm going to predict that we're in the last third of this explosive upward move. Now, there's a caveat there. The caveat is maybe we're heading towards a currency crisis. Maybe the world is changing. There's a lot of data out there that supports this. And that could mean that gold could go much, much higher. But if we don't have some sort of global currency reset, the price of gold relative to stocks and relative to housing prices is very close to when it was at the peak. So this is my prediction for gold. There are some signs that looks like it is very, very near to a peak, just in relative terms. I'm not talking about technical terms or volume terms, or could it go much higher? Maybe. Maybe it could. I have no idea. But just looking at the past, if I was going to trade it for a house, it is the exact same similar-ish ratio of the peak in 2011 and the peak in 81. So that gives you something to think about. It has not reached the peak in terms of stocks. Now that means gold could go higher, gold could stay the same in stock, or gold could stay the same while stocks fall. It's hard to say. But this just gives you a picture that if I was looking at that psychology chart, we are way past the public participation phase. They're participating. The only question is, will they keep participating and will this go way, way higher? I don't know the answer, but I'm closely watching it because I always want to find the best investment. The way I always found the best investment is I just watch what billionaires are doing. And then I just copy them. That's why I started something called the Billionaire Portfolio Tracker. And if you want to join me to follow along to see where the best investments are by just copying the billionaires, then click my bio, follow me, and click the link in there and go over to the billionaireportfoliotracker.com. All I'm doing here is I'm trying to be the best investor I can be by watching the markets, studying the markets, and watching what billionaires do. So if this is something that interests you, check that out, subscribe to this channel, and I'll see you in the next video.